Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's a fresh week and we've had an action-packed weekend also. We saw that the India-Pakistan did reach a ceasefire on Saturday, but hours after that, the Pakistan army did violate the ceasefire agreement. And the DGMO, the Directorate General of Military Operations, in a media briefing yesterday did update us that the Indian Army did respond to those ceasefire violations quite aptly. They've struck about 9 terror camps and killed more than 100 terrorists. The DGMO also mentioned that the Pakistan has lost about 35 to 40 military personnel in fighting with India. And now if the ceasefire is violated, the Indian Army has been ordered to retaliate quite fiercely. Now, it's the third day of the ceasefire and we'll watch out for any upcoming developments on this front also. But yes, it goes without saying that our Indian soldiers are showing unmatched courage at the front and every citizen stands firmly behind them with pride and gratitude. So yes, the markets have taken the pause in military action in a good way. Given the nervousness we saw on Friday, the Bank Nifty is indicating a gap up start for the markets and we've had global cues which are also quite supportive at this point of time. We are seeing some good progression on the US-China trade talks, and we'll see the entire the contours of what the talks have been later in the day today also. So yes, we'll watch out how the markets will react to this too. We'll take some stocks in focus. We have the earnings season which is at the fag end right now. We have Tata Steel which is reporting numbers today, and some of the stocks like Dr. Reddy's and Swiggy will also be reacting to its Q4 numbers. Now apart from that, like usual, we will be taking your stock related queries, so keep dropping them on our live feed and we'll take them up shortly with our market experts too. But before delving deeper into the show, let's quickly take a look at the top headlines, Sisa. Top Indian defense officials confirm that over 100 terrorists were killed in action. The 11 air bases in Pakistan have been destroyed. The NSO confirmed some casualties on the Indian side but withheld information as the operation is still ongoing. Even as the military action between India and Pakistan largely hold, DGMO level talks to be held later in the day today. US-China hailed constructive trade talks in Geneva. US President said that the two sides have reached a total reset of details which will be revealed later in the day today, and China also says that a consensus agreement has been reached. Russian President Vladimir Putin proposes restarting direct talks with Ukraine without any reconditions in Istanbul. This renewed offer comes in response to Ukraine and its allies urging Moscow to conduct 30-day ceasefire or face additional sanctions. Wall Street has ended Friday trade on a flat note, but Dow futures is up over 500 points amid progression in trade talks. Asian markets have also opened higher and the Bank Nifty is indicating a gap up start for our own markets. Like I was talking about, that the escalation of the India-Pakistan tensions not only witnessed some selling pressure in the Friday session in the cash markets, but we also saw some selling pressure which was persistent in the F&O segment. We saw last week Nifty snap its third week of gains and ended about 1% lower, and Bank Nifty also worsened amid the nervousness that was caused by the geopolitics and declined about 3% last week. We saw that defense stocks were the flavor in the last session, which is your Friday, and while heavyweights such as Reliance Industries and HDFC Bank were also down about 2% each. Now what this week holds, we have some macro data which will be pouring in, so we'll watch out for that. CPI and WPI numbers for the month of April will be coming out tomorrow, and Q4 results which is due this week today, which we have Tata Steel and PVR Inox, which will be revealed later in the day also. But three main cues which will be setting up the trade for today. First up on your screen is your fund flows data, where we can see that the FIs have turned net sellers after 16 consecutive sessions, and in the last session they sold its stocks which was worth about 3,800 crore rupees. Now in this entire conflict, they have turned sellers for the first time on Friday, so we'll watch out if there is any reversal in the sentiment, because we are seeing that the ceasefire has been held for the second day. On the other hand, DIIs have been net buyers. They offsetted the impact that was caused by the FII selling, and they've bought about stocks which is worth about 7,200 crore rupees in the cash markets. Other than that, we can see Nifty put call ratio which fell about 0.94 from 1.08 levels, and in the F&O ban list, the stocks that have been retained include the likes of Central Deposit Services, CDSL, Manappuram Finance and RBL Bank. Now, just a couple of minutes before we go to the open, but in the pre-open rates, the market has been reacting quite well. We can see that the Sensex is up about 1,300 points and Nifty is also showing a nearly 2% uptick at this point of time. But let's quickly get on board with our technical expert of the show. Joining me is Rajesh Palviya of Axis Securities. Rajesh, good morning. You know, markets broke out its 3-week winning streak last week, but now that we're seeing a bit of a ceasefire at this point of time, how do you expect markets to react going ahead this week, and what are the levels we should watch out for?
Good morning, Lovisha. So, looking at the indicative ticks, I think we are going to have a breakout in the opening itself. So, immediate resistance is placed at 24,550, which is a 61% retracement of this entire fall from the all-time high trajectory. So, I think 24,550 is the immediate hurdle for this pullback. If Nifty continues to sustain about 24,350, 400 mark, I think we may witness a short covering action in the market, and possibly Nifty may attempt to give breakout about 24,550. And if that happens, then I think rally can extend towards 24,800 mark also. So view is bullish. Looking at the ceasefire which happened in the weekend, I think that will boost the sentiment of the street. Anyway, market was holding above the major put-based concentration of 24,000, 23,800. So it was very, controlled kind of, profit booking or fall, which we have witnessed due to this geopolitical tension. But now that tension has been released now, and I think market will, resume its upward trajectory. So I think one should, hold their position with stop loss of 24,300. Upside target is 24,550, followed by 24,800. On the Bank Nifty, structure is a little weak, but again, looking at the gap up opening on the GIFT Nifty, I think Bank Nifty will also follow the same kind of behavior, and possible Bank Nifty may open around 54,500 zone. If at all Bank Nifty crosses above 54,500, here also we may witness a short covering action, and then possible rally can extend to 55,000 to 55,200. But on the high side, 55,200 is the key supply zone for the Bank Nifty. So two levels needs to watch in the today's session. On the high side, 24,550 on Nifty spot, and 55,000 to 55,200. That's the key resistance area. If we crosses these level, then rally can extend further higher.
Okay. Rajesh, what about the PSU banking theme? You did mention about the Bank Nifty levels. We saw in the last session a good run up from Canara Bank and Union Bank too. Do you find this sustainable on the charts?
Yeah, I think yes, PSU Bank are also consolidating, and I think yes, we may see a rally in PSU banking stocks also. Canara Bank is also showing strength on the near-term chart. Is trading about 20-day moving average. I think 101, 102 is the immediate hurdle. If it crosses those level, I think 108 would be the next target for the Canara Bank. Even on the Bank of Baroda, there was a decline, but looking at the structure, the immediate hurdle is placed at around 230. So, but again, in the PSU basket, one can look at the Canara Bank. Another bank that we like is Bank of India. That stock is also showing some strength, and Union Bank. So I think Canara Bank, Union Bank, and Bank of India can be looked at from the PSU banking basket. For SBI, the immediate hurdle is placed at around 800 mark. If it crosses those level, then here also we may witness short covering action.
Okay, all right. Let's quickly take a look at how the markets have opened. Well, we have opened, very solidly in the green at this point of time. We can see Nifty has opened about with a 2% gains. Nifty above that 498 mark. But yes, we are on course to hit that 24,500 mark as well. Sensex up about 1,600 points. Very strong set of gains coming in from both the headline indices, given the weakness we saw in the last week. So, the ceasefire talks that the military military actions, the pause in the military actions between India and Pakistan, that has taken up, quite well for the markets, and we can see that the markets are reacting quite positively to it also. If you look at some of the sectoral indices, all of them are, holding quite well in the green. India Wix, which saw a sharp jump to about 21 levels, is seen a sharp cool off, about 18% cool off at this point of time, to trading about 17 odd levels or so. If you look at the broader end of the markets, mid caps and small cap indices showing strong set of gains too. Mid caps exhibiting with about a 3% gains, small caps also with about a 2% gains at this point of time. Among the sectoral indices, what is standing out, Nifty IT index with about 2.5% gains, Nifty auto index with about 2% gains, Bank Nifty also with about a 2% gains. So all in all, everything is trading quite positively in the territory. On the other hand, if you look at some of the top gainers on the Nifty 50, that includes the likes of Bajaj Finserv, Shriram Finance, Trent, L&T with seeing a gain of about 4 to 3% or so. On the other hand, only one loser on the Nifty 50, that is your Cipla, seeing a cut of about 0.4%. Nifty Pharma Index, given that Trump has announced about some reduction in the price generics, that has taken a little bit of sentimental impact on the pharma stocks. It is seeing a cut of about nearly 0.5% or so on the Nifty Pharma Index. But on the other hand, if we look at the broader breadth of the markets, everything is quite in the positive territory. Rajesh, Nifty Pharma Index, that is down about 0.5%. We saw that what Trump has made the statement out overnight also, and earlier also he had indicated that there could be some tariffs which would be imposed on the pharma imports as well. How do you expect pharma stocks to react going ahead into the trading session and for the next couple of sessions too?
I think most of the pharma stocks are, witnessing some, pressure ahead of this, tariff announcement. So there is uncertainty, and we have seen sharp cut in Sun Pharma itself, and now stocks slip below to 50-day moving average. So I think one should wait and watch till this uncertainty gets over. Let the tariff related announcement needs to come, and then only one should try to buy some of the pharma space. But overall, if we look at the longer term perspective, most of the stocks are trading above their breakout levels. So I think once this announcement comes, and then I think whatever a knee-jerk reaction or profit taking settle down at certain level, then one should look to buy these stocks. For time being, I think our call would be to avoid, let the uncertainty to get over, because most of the pharma stocks are witnessing supply pressure. So we may see corrective move in next couple of days for most of the pharma stocks. Even Divi's Lab is also witnessing pressure. Sun Pharma is also witnessing pressure. So I think Lupin is also down. So I think wait for these announcement to come, then again one should review most of this pharma stocks.
Okay. Rajesh, what about the defense team? Because last week also we saw that the rally was quite visible in across the pockets, and today also we can see HAL, BDL, all of them are trading with good set of gains. Even drone stocks for that matter, Idea Forge, Dronacharya, Zentech, all of them are trading with good set of gains. Do you expect this to be sustainable going ahead, or how do they look on the charts?
I think yes, for near-term perspective, yes, most of the defense stocks have witnessed good buying action. So I think another 3 to 4% kind of up move we can see from the here onward. BDL is looking very promising. The way stock is trading above 1550 mark. I think if it's sustained above 1550, there could be a chances of 1640 to 1650 kind of target on the high side. Bharat Electronics is also looking bullish. The way stock is sustaining about its previous swing high. So I think if it continues to trade above 316 mark, I think next target for Bharat Electronics would be around 335 to 340. Mazgaon Dock is also looking promising. I think here also one can focus to buy with stop loss of 29.20, and on the high side 31.50 would be the next target for Mazgaon Dock. So I think most of the stocks are looking attractive from the real estate space. This defense space, and I think one can hold their position with the trailing stop loss of the today's low, and possible up move of another 3 to 5% we may see in most of the stocks.
Okay, all right. Let's move to some of the viewer queries that is dropping in on our live feed. Well, the first query coming in from Naveen, he's asking the view on Bank of India. Bank of India on the charts from March lows, we can see a good rise, about 15% or so, Rajesh. And even the Q4 performance was quite good. Net profit up by, in double digits, strong end of double digits also. NII was also up about 3%. Asset quality was also quite good. What do you see on the charts? What does it, hold? Where do you see it going in the near term?
Well, stock is trading at around 110, 111 level and now negotiating with its 20-day moving average, which is placed at around 114 mark. So I think if it's able to cross 114 mark, we may see rally to extend towards 120, 125 zone. So I think one can hold the position as the broader market is recovering and banking is also, witnessing good buying interest. So I think one can hold the position with stop loss of 100 and possible target towards 115 to 120 we may see in the near term to short term perspective.
Okay, all right. Let's move on to another viewer query. That is, your Satya is asking the view on Nucleus Software, on how does it hold on the charts. Nucleus Software, the company is set to report its Q4 earnings in this week as well, and the stock is also doing quite well today. About 4% gains. Rajesh, how does the stock look like on the charts?
Well, I think overall structure for Nucleus is looking attractive, and the way stock has managed to give breakout on the near-term chart at of contracting triangle formation. So looking at the near-term, short-term structure, we believe that if it's sustained above 900 mark, I think possible rally can extend towards 1000 mark also. So hold the position with 900 as a stop loss for upside target of 1000.
Okay, all right. Upside target of 1000 for Nucleus Software. Let's move on to another viewer query. Pankaj is asking the view on Tata Motors. Tata Motors, Rajesh, how do you view the stock on the charts? We saw a lot of pessimism earlier on Tata Motors also, but right now we can see US-UK trade deal. And then we also had UK-India FTA trade deal also quite well for the auto sector also. But Tata Motors on a whole, how do you see the perspective is bound to change from here on?
Yeah, definitely. So looking at the recovery from the lower band and the now stock is comfortably holding above 700, 705 mark. I think if it continues to hold above 705, I think here we may see next target towards 750 to 760. So our view is bullish for near-term perspective. Hold the position with stop loss of 705 for upside target of 760.
Okay, 760 that we can eye out for Tata Motors. Let's take another stock in focus, that is your Yes Bank, because it's reacting quite well to the news flow of Sumitomo Mitsui to acquire about 20% stake from the company from SBI and consortium of the leaders. SMBC is expected to acquire about 13.9% stake from SBI, and it is expected to acquire about 6.8% stake from other lenders too. Now, in the past 2 days, we also saw that the stock was up about 9% or so, and today also the stock is reacting quite well. Rajesh, how much of an upside do you forecast going ahead for Yes Bank?
So I think the way stock has moved up on a weekly chart, I think if it's sustained about 20 mark for next couple of days or week, I think here we may see a rally to unfold towards 24 to 25 level. Because after a long consolidation, now stock managed to be breakout on the near-term chart. 20-day moving average has given a crossover to 50-day moving average. So that's showing some strength is coming back to the counter. For near-term perspective, 24 to 25 would be the next target. Keep your stop loss towards 20. Just a disclaimer: this stock I am holding in my portfolio also.
Okay, all right. Let's take another viewer query at this point of time. Alex is asking the view on JSW Energy for a fresh long position and what are the levels to watch out for. Rajesh, if we look at from the 6 months perspective, the stocks has seen quite a slide, 35% downtick. And if you look out from December odd levels, also from 680 odd levels to about 480 odd levels, that's where we are trading at. Do you expect the selling pressure to persist going ahead? How do you see on the charts?
Still trend is weak for JSW Energy. Still stock is trading below to 20-50-day moving average, which indicates that structure is still weak. Until the stock not crosses over 500, there won't be any substantial rally we can expect in this counter. On the downside, the major support is placed at around 445. That needs to watch closely. If it breaks below 445, I think then furthermore decline towards 420 we may see in the near term perspective. So, if you want to buy stock for trading point of view, so I think wait for 500 level to cross, then buy, because that level will give comfort to the buyers and really may extend towards then the 550 zone. But till the time stock not crosses above 500, it may remain in the consolidation in range of 450 to 500.
Okay, all right. Let's take another stock in focus. That is your Dr. Reddy's Lab. Saw that the company's net profit has jumped about 22% year on year in Q4, and revenue has also grown about 8.6% year on year in the March quarter. But Rajesh, if you look at the stock from a December highs perspective, it is down about 15%. And now that Trump has also vowed about lowering drug prices by about 80% or so, how do you expect Dr. Reddy's to react with it? Because you did say that the pharma stocks are supposed to be, investors are supposed to remain on the sidelines until the uncertainty is out of the way. But Dr. Reddy's, any views on the individual counter?
I think here also, stock is struggling to cross its immediate resistance area of 1180 level. So I think till stock not crosses above 1180, 1190 mark, some pressure or some consolidation in prices would be there. On the lower side, the critical support is placed at around 1140. If it breaks below 1140, then yes, stock may show some down move towards 1100, even 1080 kind of level also. So at this juncture, avoid the stock as uncertainty is still there in pharma space. Stock is struggling to cross its near-term resistance area of 1180, 1190. I think wait for this supply pressure to settle down at certain level, and I think we may see a breakdown towards 1140. So more correction would be there in the counter in the near-term perspective.
Okay, more correction on the counter in the near-term perspective. Let's take another viewer query. That is your Anune Ricky is asking about PG Electroplast. Well, the stock is quite buzzing in the trade today. And Rajesh, how do you expect the stock to look like in the near-term perspective? Because it is up about 31% from 6 months perspective also.
I think some corrective move is happening in PG Electroplast from its recent swing high. Stock is witnessing resistance around the 980 zone, and some correction is taking place. Looking at the near term structure, now the critical support is placed at around 115 120 zone. If it's break below 820 zone, so if it's break below 820, we may see more correction to happen in this counter. But long term structure is bullish, so those who look to buy the stock for longer term perspective, they can buy and accumulate in the decline. The major support is placed at around 780 mark. So until the stock not breaks below 780, one can use any decline to as a buying opportunity in the PG Electroplast. Overall structure is bullish. Once stock crosses above 900 mark, it will resume its uptrend, and then possible rally can extend beyond 1000 level also.
Okay, all right. Let's take one stock in focus, that is your Swiggy, because that is reacting quite negatively in an upbeat market like this. This is due to the weakish March quarter performance that the Swiggy posted also. The company did post a net loss which nearly doubled to about 1081 crore in the March quarter. On the other hand, if you look at the top line, revenue has jumped about 45% year on year to about 4410 crore rupees in quarter 4. From 500 odd levels, Rajesh, it is trading at about 300 odd levels. Brokerages have also taken a little bit of a cautious stance, given that food delivery growth was impressive, but quick commerce actually missed expectations. What is your view on the counter?
So still, stock is in weaker zone, and the way stock is continuously making lower top, lower bottom formation, I think we may see further more down move to happen in this counter. Stock is trading near to its critical support area of 300 mark again, but looking at the structure, we believe that stock will break this to a 300 level also, and if that happens, then down move can extend towards 270 260 zone also. So I think avoid the stock at this juncture until the stock not crosses above 350 mark. Trend is likely to exhibit on the weaker side, and we may see sell on rise kind of behavior in the stock.
Okay, all right. Let's take another viewer query at this point of time. Ashish Diwan is asking the view on JSW Steel for a short-term perspective. We saw plenty of, Bhushan power case, and of course, a lot of uncertainty also emerged on the stock also. But if you look at the stock today, it is up about 2.3%. Rajesh, what is your view on the counter? Should investors remain on the sidelines at this point of time, or how do you view it?
Yeah, I think one should remain on the sideline as the structure for stock for near-term perspective is looks like further more consolidation in the range of 1010 to 920 would be there. Either side breakout or breakdown will give the major direction for the stock. But for longer term perspective, structure is looking attractive. But for near term trading perspective, some consolidation would be there. So those who look to buy this is looking for the for the longer term perspective, they can buy and accumulate in this range. But for trading point of view, I'll suggest here to avoid the counter.
Okay, all right. Let's take another viewer query. That is your Anune Erik is also asking the view on Irida. He's stuck with about 30% loss. So what should he be done at this point of time? From a 6 months perspective, the trend is quite negative on the charts, Rajesh, but Q4 results were quite optimistic. What do you suggest? What should he do at this point of time? He's seeing a 30% loss.
Yeah, still the trend is still weak despite the recovery. Stock not managed to cross 180 mark. So until the stock not sustainable 180 mark, a trend is likely to exhibit on the weaker side. Only series of low top, low bottom formation on a weekly chart. So that clearly gives us indication that structure is still not improved despite the broader market has recovered. So I think stock may remain in consolidation range of 180 to 150 for some more time. So if you are looking the stock for trading point of view, avoid it because structure is still weak. Let the stock to cross above 180 mark. Then look this stock to buy.
All right, all right. Just one last question before we let you go, Rajesh. We are seeing a bit of, relief rally in this markets at this point of time. What should be investors' trading strategy, and what are your picks at this hour?
So I think some of the baskets where we are focusing, that is one is chemical basket. So SRF is looking attractive. The way stock is trading, I think we may see 3200 to 3250 target for SRF. From power space, we believe that Tata Power can extend its gain. So one can look to buy Tata Power also. Possible target towards 405 to 410 we may see in the near term perspective. From mid cap space, Nazara Tech is looking promising. Stock managed to give breakout of multiple supply zone. I think if it continues to trade above 1090 level, I think 1200 to 1240 would be the next target for Nazara Tech.
Okay, all right. All right, with that, we have to let you go, Rajesh. But thank you so much for your time, and we hope that we connect with you soon. All right, let's take a quick check of the markets at this point of time. As I was mentioning, we did open strongly in the green, and yes, we are holding strongly in the green at this point of time as well. Sensex is up about 1900 points, which is up about 2.5%, and of course, Nifty is also up about 2.5% above that 24,600 mark. That's what we have reclaimed at this point of time. India Wix has seen a sharp cool off, 19% cool off at this point of time, and only pharma index, which is seeing a bit of a beating at this point of time, given that Trump has announced about lowering drug prices by about 80% or so, seeing a cut. Nifty pharma index seeing a cut of about 2%. Other than that, Nifty IT index seeing good set of gains. Nifty realty index, the top sectoral performer at this point of time, 4.5% gains coming in from the Nifty realty index. Bank Nifty also doing well with about 2.5% gains as well. On the other hand, if they look at the broader end of the markets, mid caps and small caps, both of them trading with a larger set of gains. Small caps definitely outperforming the headline indices with about 3.2% gains at this point of time. Advanced decline ratio 9:1. That is where we stand at. We are definitely seeing a larger shares of advancing compared to what decline as at this point of time. But with that, let's quickly move on with the next guest of the show. We have Nitin Bhasin, head of institutional equities at Ambit, joining us. Nitin, good morning. We're seeing a very good relief rally to start off with markets today, given that there is a pause in military actions between India and Pakistan. But do you believe this to be sustainable, or how do you expect the near term to pan out?
Good morning. Without I'm not a perfect guest or guess on. I can't have a perfect guess on what happens to the military action, but it's a good relief rally. I think had this continued a little bit longer, this would have been a little difficult for the government in terms of finances. Perhaps it's a good one. Markets are taking a relief that the uncertainty on the economy actually goes away. So pretty much, I would say it's good. We hope that it remains this way.
Okay. Nitin, FIs were on a 16-day buying streak, but they turned out to be sellers on Friday itself. Do you expect the geopolitical tensions to still play a spoilsport, or will they brush aside any such fears?
Fair question. I think this will remain. This will rule the mindset of the FI investors, which were perhaps sellers for a good amount of time in the last 6, 7 months, then were buyers for the last few weeks or so. The pressure on the Indian economy, perhaps for a continued military action like this, can be, government wanting to do trade-offs between its economic spending versus spending on the defense budget. Perhaps we all know that the Indian economy is looking for investments both from private sector as well as from public government for actually increasing a jobs, B economic growth, which leading to better earnings. So I think unless the uncertainty around the military action fades away, there could remain uncertainty of the FI flows. But at the same point in time, we at Ambit are more closely watching what happens to the domestic flows as we go into the year.
Okay, okay. Nitin, we can see that the US China also, held out their talks and said that, they have had a very substantive trade talks on that front, and they'll be holding out more details going ahead as well. Would you expect the flows to be sustainable at this point of time, given that US China has also indicated a quite positive consensus in their terms of talks?
When I look at these trade talks, I think what we have to all accept is that the global markets or the global economic order will actually be going through a lot of volatility and uncertainty. So perhaps it could be that the next 3 months to 6 months, the news flow will be very much about A country and B country getting into a agreement or possibility of an agreement or an arrangement with the US. So I think this would actually keep a little bit uncertainty on exporters from India, which is the hard manufacturing exporters from India. And perhaps I wouldn't be surprised that the market focuses more on the domestic consumption plays more so than the globals. And we've seen that today. Though we believe that the announcement around the pharmaceutical, has impacted the pharma stocks today, but at Ambit we believe that it could perhaps play out very similarly what happened about few months back in the first term of Mr. Trump, when this didn't work out, such similar announcement. So I would say one should be prepared for more such pointers, but I would say market would actually more focus towards what happens in the domestic market. We are very keen on looking at what's happened on the India-UK FTA, which perhaps could be positive for Indian exports, and hence one has to look at what India does with similar FTAs, what they did with the UK, or what arrangement India does with the US.
Okay, okay. You did mention about the pharma stocks getting impacted in today's trading session as a result of what Trump has said about lowering drug prices. I want to understand more on the margins front. How is it going to impact, most of the Indian companies which have a relevant, good exposure in the US markets, be it the likes of Zydus Life Sciences or even Dr. Reddy's. They have about 40% of sales contribution there. How do you expect this, the lowering of drug prices, about 80% or so, that's what he has conveyed, to impact the Indian pharma companies also?
No, Mr. Trump tried this thing very similar in his first term also. And but at that point in time also it didn't work out because the drug companies perhaps took a legal opinion around it, and so hence we would say today that this should not apply to generic pricing. But if it is, we have to see that how it actually plays out. Very early days for this announcement, but unless and until they actually are able to hold it, I wouldn't be surprised that this gets little adjusted on the lower side, not impacting the Indian pharma companies that much. Perhaps today's reaction is pretty stark to the news, but we have to read the history of how it happened out. So we are not very negative right now.
Okay, you're not negative at this point of time. Let's talk a little bit about a defense theme also. It's once again rallying on the hopes of increased government spending, and several experts also expect to see a big jump in the defense budget this year. How do you view this rally? Do you believe this is a sustainable one?
We've always found the defense stocks to be very expensive in the last 1 year or so, and perhaps as the market was reacting to this military action by the Indian government, it led to hopes of perhaps increased fast pacing of the domestic companies into the military ecosystem or the artillery manufacturing ecosystem, and hence it was looking at as if the Indian defense companies or the ecosystem players would have much higher earnings growth. Let's see how it plays out. Whilst one is the earnings for these companies, and the other one is how it impacts India's budget. Because remember, the government has only so much money to spend on either defense or on the infrastructure. So we remain hopeful that this military action perhaps does not get intensified, and we are able to spend all the money of the government, perhaps a reasonable share on infrastructure creation. We find valuations of defense companies punchy. Let's see how it plays out.
Okay. Apart from defense, PSU theme has also been firing. If you look at PSU banks, that has also, caught investors' attention, given that we can see a little bit of geopolitical tensions which has been cropping up. How do you see PSU banks and PSU stocks at this point of time?
Rather giving my view on PSU banks, I would say that for the last 1 year or so, we've been pretty much very positive on the banking sector as such. We've been highlighting that as the market in this year remains short of earnings growth, which is the case in FY26, perhaps we might see Nifty not growing more than 11% earnings. In this sort of backdrop, banks could actually be the place where the market should actually find itself holding on. So, three sectors which we've always highlighted, whether it is banks or for the last few months, FMCG and including pharma/healthcare. These are the top three sectoral ideas. We like private sector banks over public sector banks today. Clearly, these are times of uncertainty where we have seen the stocks react very sharply to news pieces. So hence, we will see fundamentals take over a longer period of time rather than advising for the near month. We'll highlight about 6 months and 12 months. Large private sector banks, beginning with HDFC Bank and the others. Those would be the recommendations from our team.
Okay. Nitin, we are into the fag end of the earnings season. What are the hits and misses that you're eyeing out for? You did mention that you're quite bullish on the banking space, and of course on the pharma space also. You said that you're still bullish despite what the tariff narrative is going on. But other than that, anything that you want to point out with?
Yeah, so I think what's happened perhaps is the amount of misses that we used to see earlier in the third quarter. It's not that much anymore right now. So we've seen that either the earnings were disconnect or cut or reduced in the last quarter so much that we are seeing a reasonably good amount of surprises. What we notice is closer to about Nifty is growing about 8% earnings in this quarter. But what we're looking forward is how the next year earnings accelerates, because we are looking at Nifty growing at about 11% next year, and a large part of that earnings is still coming from banks. For FY26, for a broader market rally, we need earnings growth beyond just banks as well. So earnings makes us bullish on banks. Lack of earnings in many other sectors keeps us a little cautious on them, barring pharma, which includes healthcare, and to some extent FMCG, where we are noticing that the gap between the CPI and WPI, which is very beneficial for the margin expansion for FMCG, that plays out for the earnings growth as well as perhaps stock price outperformance.
Okay. Nitin, you did mention that from Q3, Q4 is still better at this point of time, but how do you find the valuations? Because that was the key concern for plenty of investors in terms of their returns. So how are you finding valuations at this point of time and going ahead as well? What do you recommend investors to, do you still recommend investors to trim their expectations compared to what markets are trading at? What is your suggestion?
So if you look at from the peak, the markets have only corrected closer to about 10% or even perhaps even lesser than that. So we don't see that the valuations in the larger cap companies or the Nifty has actually come off that much. Mid caps and small caps, yes, but the earnings are also cut. So hence, I don't see that the valuations by itself have become very, very attractive right now with still if I look at on a simple ratio like a price to sales valuation distribution stand, valuation distribution still remains one of the most expensive, perhaps even higher than what we saw 15, 17 years back in December '07. I don't particularly find markets valuations to be inexpensive. There are pockets, and hence we've been highlighting that this is a year of stock pickers. So choose stocks wisely, choose where there is earnings, choose where there is earnings resilience. So without getting into names, I would say at a broader level, market is still expensive.
Okay, market is still expensive. But with that, we have to let you go. Nitin, thank you so much for your time, and we hope that we connect with you soon.
Thanks.
All right, let's take a quick check of the markets at this point of time. Well, Sensex is still above, seeing a good set of gains, about 2.4% or so. Nifty is also above that 24,600 mark. So we are seeing a good relief rally given that the tone we saw last week also. All of the sectors are trading in the positive territory, apart from the Nifty Pharma Index, which is seeing a cut of about 1.8%. Mid cap and small cap indices, both of them trading well in about 2 to 3% gains coming in from there also. Only two stocks in the Nifty 50 losers list. That includes the likes of Sun Pharma and Cipla, seeing a cut of about 4%. Sun Pharma and Cipla with about 1% cut at this point of time. Otherwise, majority of the market breadth is holding quite well at this point of time. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for Closing Bell. We will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.